So looking at Wodonga, the area comprises Wodonga, West Wodonga, and then this small suburb of Bandiana down to the southeast. We've got Wodonga Regional Park to the north, and we're also framed by the Hume Highway, which runs along the north boundary of Wodonga. We've got some greenfields estates down to the south and potentially some greenfields estates over to the west. But West Wodonga and Wodonga look like quite established suburbs. We've got some heavy native vegetation around the south of Wodonga, so this also potentially limits the greenfields estates that can sort of go in here. And obviously this Wodonga Regional Park is never going to be redeveloped. That's likely conservation zoned. Looking at public housing within Wodonga, there's obviously some quite dense pockets. This area in the red circle actually has a housing tenure makeup of around 60% public housing, so definitely avoid this area. As I always say, go to openstats.com, have a look around the area and try to look for areas with good owner-occupier percentages and low public housing percentages. You might notice to the south, it looks like there's not much public housing, but this is a greenfields estate, so potentially avoid that area given that there's more land supply coming online, and that will probably inhibit your capital growth in the short to medium term. Having a quick look at the industries of employment in Wodonga, healthcare and social assistance, public administration and safety, they're the biggest two industries. Very similar to the other regional locations that we've looked at, it just looks like healthcare is the biggest employment industry in most of these locations by far. So it looks like quite a diverse economy with these sort of quasi-government backed jobs making up the largest percentage of employment. Looking at the project spend in Wodonga, it's relatively small. The largest project is this circa $74 million wastewater treatment plant upgrade. So just doubling the capacity of the plant and sort of improving the efficiency of it. And that's expected to be completed in early 2026. And then just a small $8 million highway upgrade. I'm sure $8 million doesn't get you much at the moment, probably just filling in some potholes. Looking at the risks from a town planning perspective, this data comes from landchecker.com. We've got some bushfire management overlays around the periphery of Wodonga. So this pocket down here is likely near that greenfields estate. We had some dense vegetation, so that probably roughly aligns with this bushfire management overlay. And we've got a big flood overlay to the north through that regional park, and that sort of flows through Wodonga as well, so just avoid these areas. Looking at the asking price of a 3-bedroom house, sitting around 600 grand at the moment. Similar to some of the other regional centres that we've looked at, we kind of had a decade of stagnation in price, and then come 2020, we had quite intense capital growth. So that roughly aligns with interest rates dropping to record lows and potentially people moving regionally during the COVID era, and then the population of Australia just really pumping over this period and housing supply not keeping up with demand. I also note that the interest rate hiking cycle started around 2022 and finished in late 2023, and we still had reasonable capital growth during that period. Looking at the vacancy rate in Wodonga, historically quite elevated, but around that 2020 era, just really tight vacancy rates. So the vacancy rate during this time was just sitting under 0.8% the whole time. So that's a very tight vacancy rate. And at the moment, it looks like we're sitting at like 0.3%. So incredibly tight in 2025. Looking at asking rents for 3-bedroom houses, you can see, again, following the trend since about 2020, we've had really aggressive price growth in asking rents. This corresponds with the vacancy rate being tight. And also, it's not something that I've touched on, but cost of capital is going to be an input into rental prices. So when rates were rising during 2022, you'd imagine that also rents would rise as well. So it's just the perfect storm, really tight vacancy rates, rising cost of capital, mixed with sort of circa 40% construction cost increases, meaning that supply just isn't keeping up with demand. And this phenomena is just playing out across Australia at the moment. Looking at the stock on market in Wodonga, you can see it's sort of tightened up to that 2021-2020 era. And there's a little bit more stock on the market since about 2023, but relatively low levels to its history. And days on market's currently sitting at 42. State average in Victoria is around 52, I think, at the moment. So Wodonga is a tighter than average Victorian market. Gross yields in Wodonga are sitting around 4.7%, and the median income to median house price ratio is sitting at 6.6, which is relatively affordable by Victorian standards. By comparison, looking at suburbs in Melbourne, the median income to median house price ratio often sits above 10. And then running a basic cash flow, purchasing the median 3-bedroom house for $580, you'd be running a negative cash flow of $9,500 if you're getting that gross yield of 4.7%. So this cash flow is just an estimate. If you purchase a property with a higher yield, it might be better. And this cash flow will fluctuate depending on what rates do into the future. And also you have to think about this cash flow in the context of a, maybe 5 to 10 year investment. Your rents are going to grow. Potentially the cost of capital goes down during that time. That's why I really like to model out my cash flows over a 5-year period and sort of project what they're going to look like. Heading north to Albury now. So Albury sits within New South Wales. And again, quite an established area, central train station. You've got some greenfields estates in this suburb of Thurgoona and potentially some greenfields estates to the north. Some of the land supply is going to be relatively constrained by all these mountains, which are heavily vegetated. But over to the east, it looks like that's where the city is going to expand over time. And we've got the Hume Highway, I think, running through the centre of Albury. So looking at the public housing of Albury, we've got some reasonable pockets throughout. Generally, the owner-occupier percentage was sitting around 60% throughout Albury, which is all right. We'd like to be purchasing in the pockets with, 70%, 80% owner-occupiers. I do note that we did have good owner-occupier percentages in Thurgoona, but additionally, there's some greenfields estates out there. So, if you are to purchase in Thurgoona, you just want to avoid being close to that supply coming online. Looking at the town planning risks for Albury, we've got the bushfire management overlay in the purple around the outside of Albury, and we've got the flooding overlay in the blue that sort of cuts through the centre of town. Looking at asking prices for 3-bedroom houses in Albury, we're sitting just above 600 grand, so it looks to be around 630. Vacancy rates are relatively tight in Albury at the moment. You can see historically they were quite loose, tightened up during that 2020 period, and we're probably sitting around 1% at the moment. You can see we had a tick up around 2023. Potentially people moved to Albury during that COVID lockdown period and then moved back to larger cities during 2023 when cities were opening up. And then again, it looks like the vacancy rate is kind of tightening at the moment. That's probably due to the huge amount of population growth we've had in Australia over the last few years. Again, rents have been rising since about 2020 as well. Much of the same factors that I discussed in Wodonga are relevant to Albury. So just huge population growth in Australia, rising cost of capital, supply challenges at the same time. Stock on market is pretty similar to Wodonga, tightened up during that COVID era and sitting below historic averages. Days on market sitting at 84 days at the moment, so that's quite a loose market. There's potentially some scope to purchase properties below market value. Looking at gross yields in Albury, it looks like they're sort of fluctuating between 4 and 5%. I've got the gross yield at 4.1% according to SQM research. Median house price to median income ratio is sitting at 7.5. So not particularly affordable. I'd like to see it at sort of, 5.5 to 6. And purchasing the median 3-bedroom house for $630, running a 4.1% gross yield, you'd have a negative cash flow of around $13,500 per annum. So the cash flow isn't great if you're purchasing that median house with that sort of median implied gross yield. So my thoughts on Albury and Wodonga. From the metrics, I like Wodonga a bit more. We've got tighter vacancy rates. We've got a lower price point for entry. The market looks slightly more affordable compared to local incomes. Although you did have quite a big pocket of public housing within sort of the centre of West Wodonga. Yields were a bit more attractive in Wodonga, so you'd be running a better cash flow on an investment property in Wodonga. A consideration that you could do further due diligence into would be the stamp duty and upfront costs, given that Albury sits in New South Wales and Wodonga's in Victoria. Victoria has just outrageous stamp duty, and your return metrics in Wodonga might be worse, given that you might have to outlay more capital. I haven't really had a huge look into stamp duty in New South Wales versus Victoria. I'd say Victoria would be slightly higher. Honestly, both areas are just looking primed for capital growth, along with a lot of the other regional Victorian areas that we've looked at. Tight vacancy rates, rising rents. Developers can't deliver new housing at the moment because it's unprofitable. The government's pumping immigration, so that'll keep vacancy rates tight into the future and keep rents rising. From an investment perspective at the moment, I honestly think that you could probably throw a dart at a dartboard in regional Victoria and get a good outcome in terms of capital growth, just from the macro indicators. But as I've said in the past, I really think that the housing situation in Australia is quite dire. Vacancy rates are just so tight in every single regional area that I've looked at recently. And yeah, I don't think it's great for Australia as a whole. And as usual, not financial advice.